Hey guys, Stokes here. Welcome back to another episode of the Weekend Trading Edge video. We've got a lot to talk about fundamentally, but we're gonna skip that today and get straight to the point with the technicals because I've got a lot to show you technically as well, and I don't want this to take up a lot of your time. So we're gonna start here on the dollar yen. We have an interesting situation setting up. Live room members are gonna remember this from our Thursday session. So bigger picture with the dollar yen, we have just broken and closed above a previous level of structure. So looking at this from a macro perspective, so like a bigger analysis, if we break and close beyond a level of structure, we call this a violation, then we can predict that price is likely to go up. This is that whole IPDE process that we talk about each and every time we break down a price chart. The next part of that prediction is to ask ourselves, if price is likely to go higher, then where are we likely to go higher to? And as my mentors taught me and ingrained in my head over years and years of training, look left, structure leaves clues. So let's look left. Let's see where our next level of structure is. It's going to be right here back in the beautiful year of 2024. And although we have a bigger consolidative level that looks like this, so this would be the bigger structure zone, I want to isolate a smaller structure zone that looks like this. And this is going to be the zone that I really want to lock in on. So I'll highlight this in white so we can see it later. Now, keep this in the back of your mind because as we go down to a lower time frame, this is where the cool things begin to happen and the real kind of fun analysis that we did in the live room starts to show. So we were looking at this on a 4-hour chart. We actually had two setups, setting up. We had an inverted head and shoulders and a butterfly pattern, and we spoke about how the two can actually complement each other. Now, I say complement because the inverted head and shoulders is a buying setup. The butterfly is a bearish setup, and you would think that they would contradict each other, but they actually don't. So first things first. What is an inverted head and shoulders? Well, an inverted head and shoulders is pretty much a head and shoulders bottom that forms at the top or a head and shoulders top that forms at the bottom. So I'll give you an example. In your traditional head and shoulders pattern, top pattern, we see a directional move to the upside, we see a retracement, we see a brief extension, we see a deep retracement, we see a failed extension, and then our expectation is that price is going to reverse like that, right? It's a classic reversal pattern. You can see the head and shoulders comes at the top. An inverted one, well, let's do the head and shoulders bottom real quick. A head and shoulders bottom, we have a directional move to the downside. We retrace up, we extend down, we retrace up, we fail to extend down, and then price action does this. In an inverted head and shoulders, pretty much what we have is this head and shoulders bottom, but instead of coming from this downward directional move, it goes from an upward directional move, which I need to draw on a little bit differently, but pretty much looks something like this. You can see it's a head and shoulders that is kind of pushed in, and I'll just go over to the chart and explain that to you. So we look over here, we can see, if I can draw this out correctly, it's going to be weird. Let's, our move up, right? We've come from a bullish move. We have our left shoulder ended up being there, our head down here, our retest there, our right shoulder here. And then just like in your normal head and shoulders patterns, we are looking for either a violation of the slanted neckline or the horizontal neckline, which is going to be this green line right here. And that's going to validate the pattern. So there's many ways to trade head and shoulders. You can trade the breakout of the neckline. I like to trade the pullback, meaning I like to look for the violation of the neckline and then look for the pullback back into the head and shoulders and then look to trade it up, just like the normal pullback stuff I show you all the time. Now, let's pause that again. So that's thing number one. Thing number two that we have is a butterfly pattern. I'll just draw this out quickly, right? We have a swing high to swing low, X to A. We have an A to B right here. We have a B to C, and we have a butterfly pattern that completes above the X leg, something like this. So the cool thing about the butterfly, we had a whole discussion about the philosophy of the butterfly pattern, but essentially what you're doing with the butterfly pattern is you're saying that, hey, price action has put in an extended move to the upside. We've broken structure, right? The bulls are all excited and happy, But at some point, what goes up must come down, and we're looking at this butterfly completion point as being the area where the relief starts to happen, meaning where the buying pressure starts to slow up, the selling pressure starts to increase, and we just see a little bit of relief. Not necessarily a full-blown change in trend, but a little bit of a relief like that. And that's the move, that's the money move that you're looking to capture as a butterfly trader. Now, the interesting thing about this is that this same move, right, that you're looking to capture as the butterfly trader, that is the pullback that the head and shoulders trader is looking to not take, but waiting for in order for them to take that pullback trade on the way up. So you could have both actually working together. And again, if you are a fancy trader, I think we're going to look at some more like stop and reverses or situations where you go from one trade to another. If you are a fancy trader, this could be one where you trade the butterfly down and then you trade, maybe not directly, but wait for your reason for entry, trade the head and shoulders back up. Now, going back to that original prediction, if I haven't confused you already, where can we trade it back up to? Well, remember that magical level we spoke about, 161.21s? You can trade it back up there, or a little bit lower to the 161 even handled number if you want to be a little bit more cautious. Either way, pretty cool opportunity / opportunities. Next up is Euro Yen, and while we're on the pattern conversation, we'll keep this nice and simple. This is not going to be two patterns. This is going to be one pattern. It is going to be a potential deepish bearish Gartley, right? So our starting point is going to be right here. This is going to be our X leg. This is going to be our A leg. This is what's going to set off our initial pattern formation. And what we're looking for is to measure this X to A right here. Take my Fibonacci retracement tool and drag that from the high of my X to the low of my A. See what retracement level we come into, right? I got a question the other day on YouTube about what Fibonacci retracement levels I use. I think that was after the top 5 indicator video that I put out, which is really good. At least you guys have been telling me it's really good, so I'm glad you enjoyed that. You can see them on my chart right here. You can pause them if you want to see them better, or I can drag them out if you want to see them better. But we know that if we had hit a 618 Fibonacci retracement with our B leg, try that again, B leg, that's going to put us on alert for a Gartley pattern. You guys know how I trade Gartleys. I look for a Fibonacci extension of 127 from my A leg low to my B leg high and back down. And that 127 extension is where I look for these patterns to complete. So that's going to give me something like this. Swing high to swing low, X to A. Retracement here, A to B. Secondary retracement there, B to C. And if price action comes into this 127 Fibonacci completion level, that is going to be the completion point of my bearish Gartley, with the zone working all the way back up to the high of my X leg, looking for shorts here on Euro Yen. Another quick pattern and structure trading opportunity is going to be here on dollar Canada. I actually have a video that I made showing you some breakdowns of what we did in the live trading room on this pair. If you guys remember last week, we spoke about this level right here, and we spoke about, hey, we have a pattern up here, but we can also look for a trend continuation opportunity in advance of that pattern, and you can stop and reverse and go directly from long to short in that pattern. Well, we did exactly what we thought we would do. I have a video breaking down how we looked at that. I'll try to put that out tomorrow. It's already done. I just haven't pushed public on it, so keep an eye out for that on Monday. But real quick, we have two things here. We do have the advanced pattern formation that is completed. This is going to be a bat pattern, so an X to A, an A to B right here, a B to C. We consolidated a little bit, but we never violated any bit of the pattern, and a D completion right at our 886, with the zone going from our 886 to our X leg. And what a quinky dink, right? That same zone that is our pattern completion zone lines up with a previous zone of structure. So even if you are not a pattern person, so boop, delete, 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 this is a pretty decent structure trade. And I say it's pretty decent because price action pretty much made a straight run from our 137.5 all the way up to our 139 even. So if you can get a reason for entry, it's a nice way to play it back down to that same level of structure that we once broke. Previous structure resistance, now acting as potential support. So either a pattern trade here if you want to be aggressive, and if you're a pattern trader, of course, or keep an eye on this, either this time frame or a lower time frame, for a sign of a hold, a sign of a potential reversal, maybe a double top. I was having a conversation on YouTube as well about 3-bar reversals, maybe something like that. and then look to trade a little relief back down. All right, enough consolidative pattern stuff. Let's talk about a good old-fashioned trend continuation type of trade. I say type of trade because, well, I'm looking at a short opportunity here, and obviously the market has been long here on the Aussie dollar. But we have done something pretty cool, but also pretty simple. We have violated a previous structure low. Again, horizontal line tool, which I was very close to putting it in my top 5 or my top 3 indicators, although it's not an indicator, it's just a tool, but I wanted to use it as a trick to show you how much I value horizontal support and resistance. This would be the outside looking in one. But horizontal line tool shows us our previous level of structure. Candle right here shows us that we broke and closed below that previous level of structure. That means we have a, insert the word, say it before I say it, starts with a V, ends with a lation, violation. So going back to the forever boring IPDE process, luckily boring trading is good trading, we identify a violation of structure. It allows us to predict a move lower. And the next question is, if you've been paying attention, you know this, if price is likely to go lower, then where are we likely to go lower to? Now, me personally, my philosophy is based around structure. So whenever I make these predictions of where price is likely to go, I always look for the next levels of structure because I believe that structure is a magnet and it magnetically pulls price to it. So the question is, where is my next magnet, or where is my next level of structure? And the next level of structure that I see comes right in this area right here, the high of being 67.68 and the low of being 66.68. A lot of sixes there, right? I can look left, see if there's anything I miss. There really isn't. So this is the next level that I would expect price action to go. Now, if I want to bring out more tools to add confirmation to that, and I want you guys to pay attention to the order in which I did this, right? I didn't use the tools first. I used price action and structure first, and then I used the tools to complement it, right? So some people will use the tools first and then use structure to complement it. Again, I never poo-poo how any trader trades, but me personally, this is how I like to get down. I like to use price action and structure first, and then my clues complement it. And there are a few clues that I can use. I can use one, a Fibonacci retracement tool. So I'm going to drag that from the swing low of my move, boop, to the swing high of my move, bop, right? I don't know why I said bop, but that seemed like the fitting word. And you can see a beautiful 618 Fibonacci retracement in there, the golden mean. And what I mean by the golden mean is that there are a lot of Fibonacci retracement and extension levels. Some, like the 50%, aren't even Fibonacci numbers. They're just psychological numbers. But the main two, because again, I answered a question for a trade about what Fibonacci levels I use, and I listed all of these, but all of these aren't really important. So for example, the 886 doesn't really mean anything for me aside from a very specific pattern. The 786 doesn't really mean anything for me aside from a very specific pattern. The two that really mean or more valuable for me are going to be the 382, which is somewhat valuable. I do like the 50%, but it's not a fib level technically. But the 618, this is the golden mean. So if there is one level that you want it to choose, use the 618, and that's the one that correlates with all the human body pictures that I showed you in the previous video about the indicators. Anyway, we have a 618 Fibonacci retracement right here, about 67.15. That's going to be right above an even handled number, so psychological number, 67 even. See how we're narrowing down our zone here. There's one more thing that I can draw on to give me some confluence. If you're a frequent viewer of the video, you know what it is. You're saying it right now. You're screaming it, and you're probably right. My anchored or fixed volume profile. And again, this is one of my favorite tools. It's really the newest addition to my trading, which is, I've used it for what, 3 years now? But this helps give me some more confluence. So you can see, if you're not familiar with this indicator, there's a nice video on it. I'll link it at the end when all the cool little video thumbnails come up. But pretty much high spikes equal high interest, low spikes equal low interest. So we like trading the void. Not a lot of spikes in here if you can see it. And then we spike up right around this level. So again, adding more confluence and more confidence that this is a pretty key level to shoot for. So all that to say, I have a prediction that price can go down to this level. And what that does is allows me to answer the question, is there room for opportunity here? And the answer is going to be yes, right? There is certainly room to trade it from here all the way down to here. It's 150 plus pips. So now the next question is, right, that's the I and the P. The D, how do I trade it? And this is the easy part. Go to your trading plan, right? I can outline a million ways to trade this because there are endless amounts of strategies. You can trade it right now as a breakout. You can do this, you can do that. But ultimately, you want to be consistent in how you trade it. So you guys know that my way of trading is a pullback, right? So I would go down to a lower time frame. We already have a pullback right here. That's the first opportunity, but I would look for a pullback trade and then look to trade it lower. But there are endless ways you can do it. What matters is that you're consistent in the way you do it. Either way, the point is there is room to go lower. So therefore, if you're watching this pair, maybe look for an opportunity to get short. Next up is going to be Pound Aussie. We're going to be here on the hourly. And once again, live room members, you guys remember this. This was our ascending triangle on the Pound Aussie. My favorite simple pattern to trade because it's very simple to trade and you know when you're wrong right away. We got the breakout from there. We broke out to the upside and now we are retracing. Now, initially, you would say, okay, Akil, we got our retracement. Is there a chance to go higher and trade this? And my answer would be maybe, maybe not. So what we want to do is we want to make sure that the move has not been made. And what I mean by that is in the previous pair, we looked at making predictions and we saw that, hey, based on my prediction to go lower, I think that the market has room to go lower to this point. However, if price has already moved to the point in which you thought it was going to go and then moves off of it, you're not necessarily, or I should say not you, because you can do whatever the hell you want. I'm not necessarily looking for price to go to that level again. And this is something you'll hear me refer to as the move has been made. And what that means, I need to wait for a new opportunity. So how do I tell if price has gone to the level in which I thought price may go to? Well, I take out my number one indicator, my horizontal line tool. I drag it to the high here. I look left. I can go to a higher time frame as well. That makes life easier. And I can ask myself, did price action go to the structure level that I thought it would go to? And if you guys remember this little blip right here, and by you guys, I mean tier 1 members, not YouTube members. I didn't mention this already. Yes, we have. We had this nice little kind of mesh zone right between here. So we have hit the bottom of the mesh zone. So all that to be said, I'm not necessarily looking for price to get long unless we violate that level. If we violate the highs, then our next level is going to be up here. So we could talk about that later. But as of right now, I need a fresh break in order to have continue my bullish prediction. So what that means is that I would need price action to violate this high. And then if we violate that high, then it's a fresh break and I can look to reset with the pullback and the move up. So that is certainly something that could still happen in the future, but it needs to happen first. So I can wait for that. And until then, I can also say, well, if price action is going to be in a little bit of consolidation, right? We're trading between this level of structure up here. We're trading between the previous highs of the ascending channel right here. Well, what tends to happen during periods of consolidation? Well, sometimes these things called advanced pattern formation. So we have a potential Cypher pattern here, which is one of our advanced pattern formations. And well, this could also be a play. Our Cypher pattern is going to look like this: swing high to swing low, X to A. As a brief retracement right up here, shallow retracement is going to be our A to B. Unlike the bat and the Gartley, we look for an extension beyond the A point to be our B to C. And then if price action comes up to this 786, that is going to be the start of our Cypher zone. So the zone between the 786 and the high of our X. This is going to be the area in which you're looking for shorts. And if price does decide to go into consolidation and do kind of the up and down dance and do like that before making up its mind, well, that's going to be good profit for us. Speaking of consolidation, we have some more consolidation here on the Euro Canada. You can see price action has just shifted sideways for a fair amount of time now. This is another one of my favorite patterns because again, it gives a clear level or levels to pay attention to. Whenever the market goes sideways like this in kind of this like accumulation or distribution type of phase, we know where the highs are, right? We know where the lows are, and it makes our prediction life very easy. If we break the highs, then look to trade it higher. If we break the lows, then look to trade it lower. And then we have to do the next step, which is ask ourselves the question, is there room for opportunity? So I can tell you right now, I'm not really interested in the lows, because if we break the lows, our new lows are right here. So there's not really too much room and opportunity for money in there. But if we break the highs, there might be a different story. So let me again take out my horizontal line tool, right? And put it on the daily and ask ourselves, okay, well, where are we at? We have inside structure right here. We have a nice little structure shelf right here. So these would be the next level, or this would be the next level, I should say, that we can go to if we can push higher. But once again, let's bring on a few things. Let's bring on some volume and just double check to see if this level is as important, important. Brain farts, man. Sunday mornings without the coffee. This is what happens. Important. There we go. Important as we think. So volume's on, and look at that. And this is the main reason that I implemented volume into my trading. Again, it isn't to give me the answer of what areas are important. I can tell that by analyzing structure. But sometimes, right, when you have these zones, right, these big zones, you want to ask yourself, okay, well, I know that this area is important, but this is also a zone of about, what, 160 pips. Like, that's a big zone. How do I narrow down my profits? How do I tell where within that zone is important? And the previous me, because I'm a scaredy cat, very, casual trader, a very cautious trader, I would always take targets at the very beginning of that zone, saying, well, I don't know where price is going to go to in that zone, so let me just get out at the very beginning before the danger happens. And there's nothing wrong with that, but as a trader, we're always looking to increase our edge, and our edge is very small to begin with, and the way we increase it isn't really by these big drastic changes, changing strategies or this or that. It's by very small measures. So it's like, how can I reduce my average stop by a little bit? How can I increase my average profit by a little bit? Not to get too much on a tangent, but I've showed you this before, right? If this is our average win per trade, right? So say you're going over your bigger numbers and you say, this is my average win per trade, and then this is my average loss per trade, right? Let's say you're a 50-50 trader, right? This is your average win, this is your average loss. Why am I doing yellow? Okay, red, right? There we go. And this, what's left over, is going to be my profit, right? So I want you to pay attention to this real quick. If we just decrease our edge, I don't know what color I'm making this. I shouldn't talk and type at the same time, right? If we want to increase our edge, and we do two things. If we just increase our average win by a little bit, and we decrease our average loss, that's the wrong one, there you go, by a little bit, look what we've done to our total. And again, this isn't just on a single trade, right? We're taking hundreds and hundreds of trades a year, most of us, right? So you can see that I've just increased my edge a little bit. And then if I were to take this and copy and paste it 1,000,000 times, right, you'd see that that's going to significantly add to our profit. So that's what we want to do as traders. We want to look for ways to increase our edge, but I don't want you to think that the small margins don't matter. They do matter. You just don't see the results of it until over time, till the end of the year, till the end of a 5-year period where they really start to make a difference. So all that to be said is that the volume profile has helped me with that, because initially I would be looking for a target right here at this white line, the bottom area. But you can see there is no volume there, right? There's nothing scary here. So what I can do is say, hey, you know what? I'm going to shoot. You can be brave and shoot for the point of change, which is this middle area with the white line. This is the highest level at 161.32. Or you can say, hey, you know what? That even handled number, 161, fib, right, is right here. How about we shoot for that level? And what I've done is I've just taken my potential profit target and I've added about 40 potential pips to it. So all that to be said is I think we can travel to that level. Let's go down to the 4-hour time frame. I think the hourly we're on. Oh, no, 4 hours, fine, yeah. And then what I'm looking for is a breakout, right? So I'm looking for a price to say, hey, if we break and close above this level, then my prediction is that we'll go here. My style of trading, once again, broken record alert, is a pullback. So wait for my pullback to retest structure and then look to catch this third wave up to that level. Trading is simple. It's not easy by any means, right? Doing this is extremely hard, especially the discipline to it. If you guys didn't listen to it already, check out the podcast I did on, emotional endurance. That has a lot to say about like how long we could be uncomfortable doing the tough things. And that's and some tips on how to work on it, of course. But that's one of the reasons that trading isn't easy, but you don't need a fancy, crazy, like strategy to be a successful trader. The simple stuff has worked forever. And if you look at most of your great traders, and including like big banks and stuff like that, they take a very simple approach. It's not fancy, it doesn't sell, it doesn't get clicks and likes, but it makes money. And at the end of the day, like, that's what matters. It's about that time. We take a look at the shiny things as you guys request each and every week. We're gonna look at gold, we looked at gold last week. We're gonna look at silver this week. Silver, like gold, has come down to a previous level of structure support. And now we're kind of just hovering there, war stuff, fear, uncertainty, panic, right? Now, we are at a level of structure, so this is a level that we should be looking for longs at from a technical perspective. You even might have had a higher high. Yeah, you did have a higher high, higher close right here. So for you guys that like 3-bar reversal patterns, here's a great look. Here's bar number 1, high momentum bearish candle. Here's bar number 2, bullish rejection candle. And then bar number 3 is the higher high, higher close. That is an entry technique in its own right. And then after that, you can see we actually get a nice little double bottom as well. Now, if we zoom in the picture, we can also find one more classic reversal pattern here. I might have ruined it for you, but can you see it? Can you see it? Yep, it is going to be a head and shoulders pattern. Now, not the funky looking inverted one I showed you earlier. This is going to be a regular normal one, not to put any shade towards the inverted one, right? I'm not saying it's weird. I'm not judging. This is just the more common one. Gotta be careful with words these days. But we have our directional move downward. We have our brief retracement up. We have our small extension down. We have our deep retracement up. We have our failed extension down. As of now, this is our head and shoulders pattern. Just like I mentioned earlier, 2 ways to trade it. If you are a trend line trader, the slanted neckline is going to be your violation point. If you are a horizontal support and resistance trader, your horizontal line here is going to be your neckline and your violation level. They happen to be very similar locations. So unless this thing drags on for a while, you'll probably get the same signal. So if you're looking for a more conservative way to enter silver, maybe you're like, hey, 3-bar reversal, not in these conditions because things are weird with war. And maybe you're saying double bottom. I want to be even more cautious than that. Maybe look for a head and shoulders pattern. Again, looking for this to complete, violate our level here. And then however you trade it, you guys know me, pull back, look to trade it up. Lastly, we are heading to the DAX, and this is going to be, we're going to end with a pattern formation just because we don't talk about the DAX too much, but this is a perfect opportunity to do it. We have a potential bat pattern, I believe, setting up. We have an AB equals CD pattern too. Let me measure that in, but looks like we have a bat pattern setting up here on the DAX. Yep. We have an X to A, this swing low to swing high right here. A to B coming to our 50% retracement, just missing our 618. I don't have a just miss rule. It either hits it or doesn't hit it, so it's still going to be a miss for me. We have our failed extension right here, and then if we come down to this 886, right at this beautiful zone, right? You guys know me and the elephant candles. I like the consolidative zone before that. That's going to give us the completion of our bat pattern, which would be a bullish bat pattern looking to trade it up. I said I'd measure out an AB equals CD pattern, but the more I look at it, I don't think we're going to come close to getting that. Nope, nowhere even close. What were my eyes thinking? These are no coffee eyes for Akil. Let me just do a 1618 real quick to see if we have it. Nope, not that as well. So just the bat pattern, sweet and simple for you. So that's it. Hope you guys enjoyed the vid. Be on the lookout for the video tomorrow about the dollar Canada. I'm going to keep saying it. That way I'm actually pressured to produce it. And I hope you guys have a great week of trading. Like, subscribe, all that fun stuff if you're not already. And I will see you guys in the live room, many of you. If not, I'll see you guys on the next YouTube or podcast or all the other stuff I do here on the internet world. All right, goodbye.
I wanna be the best in the game, invest in my name. Check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change. Possessed by the thought I'll be free one day from society's restraints. Money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name. All our insecurities are on display.